Enchanté.
Today we'll have a discussion with Eric Bierry, who is the CEO of SBS. He has a 30-year career in the banking sector, and today we'll find out more about him and we'll benefit from his banking expertise. Hi, Eric.
Hi, Caroline.
Welcome. Thanks for being with us and for giving us your time.
With pleasure.
So I've quickly introduced you, but can you tell us more in your own words about your career path?
Yeah, with pleasure. In a few words, I started in 95 in the IT. And there are two major milestones, I would say. One, I did join an Indian company at that point in time called Polaris Software in 2006. It was a spin-off of Citibank India dedicated to the corporate investment banking, and it was the software industry. So it was my first experience in the software, following IT consultancy, I would say traditional activity. And the second major milestone was when I did join Sopra Group in 2011. It was only Sopra Group at that point in time, and I started as CEO of the Benelux region. And it was only on the consultancy and integration activities. I did join Sopra Banking Software end of 2016 as a chief client officer and then deputy CEO and then CEO of the company.
From your point of view, what's the most impactful lesson that you've learned over the years?
When you're looking at so many years and so many different countries and the relationship with the clients and I would say the trust you're able to build and engage with this client, this is for me the most important thing. I should be looking at the last 29, 30 years, yes.
So you're now leading a 4,500 employees company. Do you have a secret to share an important milestone?
It was not fully anticipated to become CEO of that company day one, but when I'm looking at my experience and I would say what did change my own trust and confidence in being able to deliver that kind of job, I would say it was in 2005. It was following, so many French and British people will know the company I'm going to talk about. I was working for Logica, a UK company, but I was in France. And Logica in UK was one of the top 2-3 company, but in France maybe it was top 25, top 30, so a small player in France. And Logica did acquire a very French-based company called Unilog, and Unilog in France was 30 times bigger than Logica in France. And at that decision, so I was very far away from being part of the key decision maker of that deal. I took a decision to quit very quickly, but I was young. And following that decision, just look at myself and saying, okay, I don't have any more job. So what do I do? And I took the decision to do the only thing I was considering I was doing well, which was visiting my clients, existing client from Logica, but even from the past, and telling them I'm available. And I think I'm able to support you for outsourcing, for business process outsourcing also, and transformation. And my surprise, which was a positive one, was that after 1 to 2 months, I didn't have only one client, but I did have 4. And I was occupied as a consultant for them in their transformation at more than 125%. So I think gaining that trust, that being able to support executive level within my financial services client at that point in time has been for me a critical milestone, I think.
As a kid, did you already picture yourself as a future leader?
Of course, of course not. No, not at all. First, because I think I didn't know what what is the CEO role. What was clear, first, I was fully energized every time. So it was very clear to me that I would need to have a job impacting, meeting people. But I didn't figure out what would have been really my job for the future. But I was convinced that it would be something with impact, with results, with a lot of connections and travels.
If you could choose what your teams will remember from you, what would you like it to be?
I think there is something very important, and when I started my CEO role, my direct team, what we call the executive committee, was composed only by French people. And one of the first decisions I took was we were operating already within 60 countries. So having only French people in a 15 executive committee member was not, let's say, good, just good compared to our business and compared to the countries where we're operating. So my first decision was to drastically change, move from French to English language. So it seems to be completely crazy, right? And having people from diverse culture inside that executive committee. And when you're looking forward, it was not just one decision, but it's more like a pattern. In my career, I'm usually not following the business manuals or business books in the way to build a team or in the way to look at a situation. I'm usually trying to think a bit more out of the box and to build teams with experience, with gender, with approach, which are not only just following the domain where we should be working. So I think that inclusive way to look at things and the inclusive way to build teams have been a very continuous and strong pattern in my career, yes.
Speaking of inclusion, I remember that last year you participated in the Soprast area group initiatives around the Month's Pride.
Yes.
Can you tell us more about this key role that you chose to play that will be key to promoting the LGBT plus people within the group?
Yeah. So there are two things. Maybe one linked to when I was a child, because many things are linked to your experience when you're younger. I was 6 or 7, and I was in a Catholic school in the east part of France. And all the activities were driven by church nuns. So just to give you the context, right? So when you see the context, my best friend was called Fernando, and maybe he's going to listen to us. It was a young boy, as we can imagine in early 80s, and especially in that Catholic environment. But in his mind, he was not a boy. And you know, today it's not easy, but can you imagine in that context in early 80s? And the dilemma was very simple. You know, at 6, 7, 8, you like to have many friends, but this Fernando was considered as not being part of the tribe, and it was my best friend, right? So very difficult to talk to the nuns, even my parents, because it was something very difficult to understand. And in fact, in my life, it has been the first time I've been impacted by this event, which was for me not good, or which should not exist, I would say. Not the situation of Fernando, but the way people were reacting, because he was thinking like this, and I'm sure that many others are in the same situation, and so that's what did impact me first in many years ago. Back to your question and what I did last year. For me, it has been, for many reasons, such like Fernando, very important that our leadership position, we are giving example, and we are showing to the others that having that inclusive approach and especially for that population, because we are talking about racism, we are talking a lot about gender equality, which is a bad word, I think. But we are usually never talking about LGBT plus, or especially people without gender, which is for me even the most difficult situation within the society today, not only the company, but much more globally. So for me, being sponsor is a very, very small step with a lot of humility to start to make things change. And being sponsors is showing the example. And for me, that's only the beginning, because if you want to impact and if you want to change things, it has to be embraced by many people. You cannot just decide alone. But as a leader, usually a lot of people are looking at you, and as they are looking at you and you are showing something, you do expect that something is going to work. So that was the idea, and this is even more the idea today. Yeah.
So what would you like to achieve in that area?
I think in addition to giving the example, I have 4 topics in mind, small one, but first, that there is no policy in the company. I did look at other companies where they did put in place some policies, and I think having a policy in regard to the situation for these people is like having policy we do have on the gender equality, and no one is surprised having policy on gender equality today, and there is none. So I think starting that initiative is one. The second is we want to attract the best talent, and the best way to support that inclusion is also to attract the best talent, being part of that community. And to do so, we need to adapt our candidate experience, I would say, or our process to recruit this talent. And again, we're not talking about a big effort to make it change, but making something to make it change, I think, is making sense. The third one is how do we support these people? I told you earlier, a job as manager is supporting his people. And I think it's very, very crucial in the way to drive a company, in the way to drive careers of the people. And as there is no policy, and as this is seen as something very curious, and I'm staying polite saying that, I should say, if we don't put in place the right support for these people, they will be having the feeling that no one is taking care. So that's my third initiative I would like to put in place. And the fourth one, again, and remember my story with Fernando. The first problem was the awareness. No one was aware about what it is. And of course, it's easy for a child at 7 just to say, he's not part of my community, right? And awareness means training, because if I'm looking at the people in my management team, how many of them have been able to address this topic? Because this is something they don't know. So that level of awareness plus training, I'm not talking about hours and hours of training to understand the bias, but just to understand that in our day-to-day, we are doing a lot of these bias and we don't see them. And just having that mirror in the way you're addressing the situation usually is changing a lot. So these are the small action, I would say, and expecting then that, of course, many people are going to follow.
There is a major news that everybody has heard of, and I'm talking about SBS and Axway merging.
Yeah.
As the CEO of SBS and a seasoned expert of the financial market, can you tell us more about this vision that has prevailed here?
Yeah. Of course, it has been seen as a pure financial transaction. And as Axway and Soprasteria are both listed company in France, and I would like just to insist on that point. Many people are considering Axway as an American company. This is not the case. They are headquartered in Annecy, the very well-known city where Soprasteria is also headquartered. So these two companies are listed, so meaning doing a transaction with two different listed companies, we were obliged to follow very strict financial and stock exchange rules. So no one was aware, and suddenly everyone is aware, and of course no one was anticipating that decision. But back to the rationale behind, because I think it's the most important thing for all of us. First, this did not suddenly pop up in Jan or in Feb, like we can see acquisition from one company to the other. I started personally to work on this during the summer 23. So meaning it's not a sudden decision from a shareholder to make a big chaos everywhere. The real rationale behind, and there are two, but there is one from a shareholder perspective and there is one from an industrial standpoint. From a shareholder perspective, maybe you know that Soprasteria listed is mainly controlled by a family office holding called Sopra GMT, so the Pasquier family. And Axway, listed also, but is also controlled by the same holding, Sopra GMT. A lot of analysts looking at the profile of Soprasteria were considering that it was jeopardizing the strategy of Soprasteria, keeping in the same company software activities and services activities. And just saying no one else in the market is doing the same. And back to the inclusion, when you are different, of course, whatever your performance, the people outside are just saying, oh, it's wild. And at the same time, Axway was, let's say, delivering a very strong performance, but was not growing. So from a shareholder standpoint, looking at what the market was saying and looking at the probability for growth for the future, they were just saying, what if we merge software business into a single group and services business into a single group? And by coincidence, which is not the case, all the markets, all the analysts said, oh, that's a brilliant decision, right? That's the rationale from a shareholder point of view. But it's important because that holding and the Pasquier family have given a long-lasting track record in delivering medium to long-term journey and projects. So which is giving a reinsurance on all the initiative we did start and which will not be stopped just because of that merge. There is a second rationale behind. So as I said, more industrial. And maybe let me just give you a picture on this. The core business of Sopra Banking Software, SBS, is to deliver software on what we call the processing platform for banks. So what is processing platform? I take an example. You ask for a money transfer, okay? So you ask to execute the money transfer. Behind the scene, there is what you call a payment engine. And to give you an example, in France, 60% of all the payments in France are on a Sopra Banking Software product. So that's what we call processing, okay? Axway business, and when we are talking about processing, that means that we are processing data, and that ability to process data is giving new data to the bank. So we are dealing with data, and we are giving enriched data to the bank, and then the bank can decide what they do with this data. But that's our core business. On the other side, Axway is proposing to their market technical tools, let's call it like this, to manipulate this data. So they are doing data transfer, they are doing API orchestration. So API are the connectors between applications to exchange data, and they are putting tools in place to secure that data. So on one side, you are building data and trusted data. On the other side, you have the tooling to manipulate and to secure the orchestration of this data. We still have some work to do, but we see that the combined approach to propose to our clients, especially in the financial services, our processing platform enhanced or augmented with the tooling from Axway could generate a lot of added value. So these are the two rationale behind.
Okay. As an SBS employee, I don't know how this merging is going to impact my job, and I'm sure you don't know how it's going to impact each and every job within the SBS. But what can you say to reassure people?
As said just before, the shareholder is the same. That's very important. So meaning that we are not suddenly governed by a private equity firm cutting all costs and stopping all the roadmaps. That's one. Second, the day-to-day activity for each of us is not going to change because our plan with our clients still remain the same. My salary slip will still be having SBS as the name on my salary slip, and the amount is not going to change. My advantages, packages, all of this is not going to change for a simple reason. We took the decision that there will be a new name for a new group company. And I'm still not able to give you the name, but it's going to come very shortly. And inside that group, there will be two entities, two companies. One called Axway, delivering their business to the Axway client with the Axway branding. And the second will be SBS, delivering their product and their services to their client and to their market. And we're going to keep these two companies and these two operational entities separate, I would say, and we will be starting to combine finance, accounting, tax, cash, and so on. But the two activities are different, and progressively the idea is to issue the new product based upon my industrial rationale, but it's going to come in 2, 3, 4 years. So the next 1 year, 2 years, I'm not expecting so many changes. And I'm even telling them that we need to be very focused to our client and very focused to the engagement we're having with banks, because that's very critical, and that's where the banks are looking at us and expecting us to be in the coming 2, 3 years. So that's the way for me to reassure them. I'm traveling a lot to visit all my team. I was in the US last week. I was in India 3 weeks before. Obviously, all different countries in Europe. I'm going to go in Africa latest in May. But I'm just saying the truth. The truth is this one. Impact of truth is usually very strong, and by chance it's the reality. So that's the way this move. But of course, that announcement, fully driven by rules from the AMF, so the French regulator of the stock exchange, is giving something which is very brutal. But the reality is this one, and our job at the moment is to support our team and of course to explain.
So Eric, we've talked about you as an individual, as a CEO, and now I want to talk to the expert. So in 2023, the year was quite solid for the bank in general. And as the banks transition to 2024, it seems that they are facing rather uncertain landscape with geopolitical uncertainties. From your point of view, what's going to happen?
Who knows what's going to happen? Let's first, 23 was good, but with diverse outcome, I would say. Banks delivering variable rates loans did have better short-term benefits compared to the one delivering fixed rate loans and such like the French one. And of course, the exposure of these different banks, depending on the different regions across the globe, and as you said, with the geopolitical instability at the moment, has also given some differences. And you're looking at the volume some banks were doing in Russia, for example, and you look at the last 3 years, it has impacted their P&L at the end of the day. So that's 23, and you're right, uncertainty on 24 is very high, and very difficult to know what's going to happen. But if we come back to the basics, and I think it's important to come back to what's the role of the bank. And usually we forget. And sorry, I'm going to come back to the COVID. Usually we don't like to come back to the pandemic. And I think COVID did give us what's the real role of the bank in the society, in front of government, and for each of us as individuals. When the COVID did come and suddenly lock down everywhere, starting with the government and followed by all stakeholders, everyone was looking at banks and saying, so except all the sanitary decisions, the rest was fully centered on banks. To give loans covered by governments, to simplify life of the individuals if they cannot work during 2 months or 3 months, to support the recovery of the economy. And they were at the center of everything. So 10 years before, they were considered as a bullshit player, killing economy, killing people, with investment bankers especially. And if you remember Lehman Brothers and so on. And then the COVID, and then bank again at the center of everything. But what are the basics? Basics are the bank is there to support the economy. To support the economy means for you to support the key event in your life. So you decide to buy a house or apartment, you are not going to ask a fintech to bring the mortgage. You have a baby coming and you need to change many things, and the car and insurance and so on, and savings for your child for the future. Again, you are not looking at a fintech to do it. You're going to visit your bank and you will be expecting the bank to support that event in your life. So that's the role of the bank. And when you are asking your bank to support such like events, or a company decide to invest for the next 10 years and is asking for money, let's take something very simple. The bank has to look at the forecast for the next 10 years. And more there are uncertainty, so a war can start very close to Europe, for example, more they will have to protect themselves if they support you in your project. And supporting them, protecting themselves means that they will have to do provision and more provision. And there are regulation by chance, which is showing that a bank cannot expose itself more than a level of liquidity the bank is able to keep and to manage. And of course, more it's risky because of the uncertainty, more that provision is high, more your ability to expose the bank to do business for the bank is limited because at the comparison with the liquidity inside the bank. So it's very high level, but this is showing first why suddenly the number of mortgages did decline, why investment from companies did decline, because first the companies were not super optimistic on the future, and second because the bank were not very supportive to support that business. So back to your question, what does it mean for us in 24? For sure, this will be a year globally difficult, where we do not expect a lot of investment coming from banks. But they have today, talking about European banks, for some US banks it's maybe a bit different, but for European banks and African banks, they are having globally good ratio, which should be helping them, I would say, to stay sustainable, which is very critical for all of us. But of course, you will not be having so many huge investment to prepare the future and so on. So that's the situation we're expecting at the moment. Of course, I don't know if something else is going to happen in the coming months, but we all keep fingers crossed that the level of stability is going to still remain at least the same or will be improving, yeah.
What you're saying brings the question of trust between clients and banks. And we know that trust is key in the financial sector. And you mentioned it a lot in your speeches. And it's also a big focus in the DBX survey. Do you think that banks are really aware of the fact that trust is key?
Yes. I think so. But let me give more detail. We did conduct, as you said, the DBX survey in collaboration with Ipsos. And usually we are questioning 500-600 different banks. And usually we do that to support our vision on what we should be doing for the next 3-5 years in our product. In 23, for the first time, so we did it as usual, I would say. And we took the decision also to address a bit more than 10,000 end clients, such like you and me, to understand what are the critical drivers in their relationship with the banks. And on one topic, I should say I've been surprised by the result, which was linked to the trust. And more than 80% of these 10,000, so starting to be interesting figures, were trusting their banks and were considering that trust is the first reason, and not the cost of services, not the pricing, the trust. But trust is quite complex because it's very difficult to measure. And we see two kinds of trust. The first one, which is the real one for me, is linked to the fact that you're giving access to tons of data about you. You're giving your secrets somewhere. They know where you go. They know what you're doing, what you're buying, what you're eating. They know everything. If they want to know, they know more than anyone else what you're doing. Okay, cash is disappearing, so quite difficult. So the bank knows everything. So you expect from the bank that they keep the secret for you. And of course, then you expect that they will be using the secret only to bring you benefits. So it's the way the trust is established today. And this one is very critical. The second part of that trust is linked to your life project. To come back to the example, you want to change the apartment, you will be expecting, because you trust your bank, that your bank is going to follow you for the new mortgage, right? And if let's say, if suddenly they do refuse, well, you don't trust them anymore, right? Which is not at all the same trust. And of course, if they do so, there may be a reason, and we were talking about uncertainty, and maybe you are not doing enough savings or whatsoever. But I want to focus a lot on the first one, because the only one which is able to establish sustainable relationship with your bank, and especially preparing the future, because the future is more digital, the future is more very short time to market, instantaneity, very difficult to say in English, so to make everything fast, right? And because as a consumer, we expect that everything is immediate. And for a bank, being immediate is not so easy, right? So they have to put in place a lot more processes and digital and connection to many, many things. And more they do that, and more you expect from the bank that the trust is still established with your secrets, right? So I think it's the major stake for the future for the banks, and it's the only way banks will be able to continue their core job, which is supporting the economy and then each individual.
Do you think that banks do whatever it takes to foster trust?
I should say yes, they do a lot. First, they are aware. Maybe, let's come back 50 years before. You were not there, right? You were putting your money in the bank, and the trust was linked to they keep the money. We are today. Today, you want to purchase something and you want to pay it 10 times, and you just want that the bank is going to manage everything because you want it immediately. So that trust is evolving, and this is supported by a lot of new features and a lot of new services the bank is providing to you, because they're having a co-competition with the fintech at the same time. So fintech are providing new services. The bank doesn't want to be disrupted or disintermediate with you, and they know that at the end on very critical topics, you will be coming back to them. So they are forcing themselves with that co-petition to improve their digital journey and digital experience, to give you more and more perception that the real trusted partner for you is your bank. So I think they are investing a lot. And today, I should say, they work a lot in reducing their cost on processing, to invest more in all what they call engagement, so meaning all the services you will be able to enable or to use, to consume, to still continue to consider that it's your trusted partner. So that's where they are, looking at all their strategies and whatever the kind of banks, it's in the center of their attention, yes.
Speaking of investment, banks are investing in AI, artificial intelligence. AI has been seen by many as a game changer for humanity, for the best or for the worst, and financial services are not escaping from it. As a leader of a company, how do you integrate it in a daily basis into your roadmap? Did it change your strategy?
Not an easy question. AI is everywhere. Everyone is talking about AI. I'm going to try to give you some concrete example, but just one message for the banks. They are doing AI for the last 20 years. When you are asking for a mortgage, there is a credit scoring, and the credit scoring is based upon machine learning. Machine learning is AI, right? Just to give to all people listening that it's not something new, but two things have changed. One, the machine behind to drive so many data at the same time are now performant enough to process so many data. And that's something very important which did change. And then behind this, the wave we're having with AI is not just an evolution, it's a revolution. It's disrupting the way we are looking at things. And meaning that for people like us, and being 50, it's quite difficult to see and to anticipate and to say, wow, that's clear. AI is going to change that in my business, right? We need to listen a lot. We need to experiment a lot. We need to learn a lot. And learning, I think, is very critical for all of us. But back to the concrete example. So, of course, we did start to say, wow, we need to do something with AI. But very rapidly, we said, what should be the benefit we are expecting from that kind of technology/revolution? Are we able to reduce the number of people? Many companies are using that driver. I'm convinced that it's not the real driver, and we did not see the opportunity on our side on that part. We did identify three main. One, objective to gain speed was very important, because you as individual, you're expecting shorter time to market. So our client banks are expecting new product, new features very rapidly, and they are looking at us, the provider, to deliver the features more rapidly. So time to market and so speed for development was seen as number one. Quality of our development, and behind the quality, so of course the number of bugs, but the capability to drive testing automation to deliver faster, and then you automate all the tests and you secure that your product is going to be in good shape, was something very critical. And the third one was linked to better supporting our clients. Our clients are using a support hotline, and when they are using our product, and how do we augment the client experience using our product. So this was definitely the three driver for us to look at it. So, and we started the experimentation before deployment, and now we are starting to measure what are the real benefits. So we started with for the developers to give them a tool which is called Copilot, very well known for the expert, and to see if a developer is using that, does it bring 1, 2, or the 3 benefits I was mentioning just before. So we started with a small team, 20, and then we deployed to 150. We did compare with other teams doing the same thing without the tool to see if there is a gap, and there is one when you do measure. And the plan is now to deploy it in the next 1 year to my 1,000 something developers across the globe. What are the results? Do they go faster? A bit, but not so, but a bit faster. The quality, documentation, test automation, wow. Result is impressive. So meaning that the quality should be a lot better in the coming months with the new releases. And when I'm talking to my senior developer, the guy with strong expertise, they are all saying first that they would never accept anymore to work without that tool, and that they are focusing their activity and their mind into what's impacting, what it's bringing value, rather than doing a lot of repeatable tasks. So I should say the result is good, at least as per plan, and not at all what sometimes we are listening or reading that, wow, we can divide by 3 the number of developers, or that our business, our work is going to disappear because replaced by the machine. So for me, with a very humble step on what we have done after 6-9 months, I think there is a huge benefit. The second concrete example is for the support. So we have put in place what we call a smart search. So meaning that our clients can access for some product at the moment, not fully deployed, to what we call a smart agent. So you do interact, speaking in your own language, by verbally or written. And you ask questions, and the system is answering based upon experience, all the interaction, all the documentation, what did happen with other clients, and so on. And by chance, if this is still not enough, these clients they are having still access to real people with a real expertise behind. But yeah, there are some good results, and I think it's only the beginning.
How do you expect it to change the future of financial services?
For me, there are two things. Of course, that real-time, immediate way to look at things. AI is going to support and accelerate ability for banks to give real-time capabilities and real-time features, and we are all expecting this. So I think that part is very important for them, and it's critical. There is a competition, the race is there, and that should be leveraging that part. There is a second, which is mainly linked to fraud and detection of fraud and detection of patterns which are on the behavior of the people or the company, which would be quite difficult for a human just to watch and to detect something, and where AI is able to bring a lot faster result in that detection. So I think that part is very critical, and remember, back to trust. So driving fraud is very important. And I have a special one on my side, which is linked to the bias, and back to the inclusion, right? For me, the immediate. So when you're looking at machine learning, the machine learning is learning based upon the pattern of people where you have the volume. So if your bank is addressing Catholic, white, 25 to 40 years, all the machine is learning based upon that group of people. And of course, and I forgot male, even better. So you're a female, you are 22, and you're black. Or even worse, you don't have any gender. The machine is looking at you, and your pattern is not at all linked with the way the machine did learn. Right? And then you don't have your credit because the machine is saying that we cannot trust you. So this is what we call bias, because of course, black people are impacted sometime, female are impacted sometime, living in that part of the city is impacting you. So there are many, we found many bias, and there are a lot of people talking about this bias today. So AI has been seen at the beginning as increasing the bias. And I think it was true. And now we see the AI accessing to more data and to more ecosystem than only the existing data available within the bank. So this is starting to help to reduce the bias. And I think this one is very critical for the future.
People have been talking about open banking for a while now, and this is a concept that is now extending to open finance.
Yeah.
This is a buzzword for many, but I'm pretty sure that most people don't really understand what it is, such as me. Can you tell us what it is in simple words? And as an example, can you tell us what role SBS is playing in this ecosystem?
Yeah. Very simple picture. Open finance and open banking are pipeline between accounts. Simple. So you cannot say that you don't understand, right? To make it a bit more, let's say, fact-based, you have a current account in the bank A, right? You have a savings account in the bank B. You have an insurance account with a bank insurance called C. And you have a loan for your electric scooter in the bank D. And you want to change the scooter. And you want a big one, right? You're going to multiply by 3 the amount of your loan or lease. In the traditional world, the world we know, or at least I know, you were coming to the dealer with all your documents, right? Your tax, your salary payslip, your way to justify where you're living, proof of identity, blah, blah, blah. You are giving everything, and you were starting to pray that they will accept because you are multiplying by 2 the amount of the lease, right? I can imagine you not very happy to wait for this 1 week. And what open finance is changing in this life? The bank supporting the lease or the loan, if you do give your consent to access to all the others, and if you give to A, that means that B will be having the same consent on the other way, right? You're giving to bank A a full access to who you are. Having a full access of who you are, supposed to have the famous pipeline to access and some business rules with the consent and so on. There's some complexity behind, but that's the model. So meaning that you're arriving and the bank behind your dealer is already having access to your life because you gave your consent and able quite immediately to say, wow, Caroline, she's taking care, she's having savings, she's not spending so much money, and we can trust her and no reason to wait 1 week, right? Give it straight away. And you can come back with your new scooter, right? So that's open banking and open finance. And more we go, and more this will be seen as embedded finance. You will ever not know in the future that there is a bank behind your dealer which is dealing with all of this because you don't care. You just want your new scooter, right? So that's open banking, that's open finance. So it was seen at the beginning as a constraint, so forcing each bank to open with API access to the account and to drive what we call the consent management, which is very complex business rules, and it was seen as a constraint. So very defensive approach. More we go to that immediate strategies, more we see the one who want absolutely to win the race, a fantastic opportunity to simplify your life. And you know, usually we're saying less you're having constraints and things to do, more you're spending. So at the end of the day, everyone is happy. So that's the model. And what we do in SBS in that world, because so we started with that first regulated constraint. So we're having 41 clients So we are operating in the cloud, public cloud, all that consent management and data exchange for 41 banks in 6 or 7 countries. That regulation is going to move in the future because the ECB, the European Central Bank, is moving, forcing that regulation to go to the next step. So today it was only linked to current account. And the new regulation is giving the opportunity that you will be able to drive your new scooter because this is going to open access to all the accounts and especially savings, which is giving a full picture on who you are. So that's the new regulation expected for 26. So now all the banks are saying, wow, it's not anymore constrained. It's becoming a competitive advantage for the future. So we are a player in there. And back to the Axway story, even if it was not the question, Axway is doing the pipeline, if you remember where they're transferring the data. They are orchestrating that data. So we are giving the consent management, which is the complex business function. They are bringing, because we were using Axway tool in our open banking product, and now we are answering together to a bank in the US to put the full system in place. So fingers crossed, decision end of September, but the proof of concept is running well, and that would be the first collaboration between the two entities, which would be fantastic.
Thanks a lot, Eric, for being with us and sharing your expertise and some insight about yourself.
Thank you, Caroline. It was a pleasure.